morning, everyone. Welcome to today's edition of Frontier Opening Bell. It's Tuesday, the 16th of June. I am Bosun Omofaye, my panelists. Let me start with Luke Ofojebe, who is the team lead in charge of equity research at Vertiva Capital Management. Good morning, Luke. Hope you had a very nice night.
Yes, I did, Bosun. Thank you.
Thank you so much. Let me also introduce Ayode Jebo, who is the CEO and chartered stockbroker at Afrinvest Securities. Ayodeji is also joining us from Lagos here. Thank you, Ayodeji. Good morning.
Morning, Bosun.
And our friend from the East Coast, Ali Khan Sachu, who is the rich man at Rich Frontiers Management Limited. Good morning, Ali.
Morning. Good to see you.
Thank you very much. Well, welcome to Tuesday. So let's get the show started. Give you everyone a quick roundup of the markets, a bit of a soft Monday for the global marketplace, a bit of a knock-on effect on a few African frontier exchanges. The Nigerian market lost about 1%. You can see that below the 25,000 psychological index reading. The BRVM was much deeper. The BRVM composite index was sharply down 1.37%. A profit taking despite some of the corporate earnings from some of the listed companies on that regional exchange based in Abidjan, the Ivorian capital. Egyptian markets, the index, the EGX 30 was down 0.58%. Meantime, the Kenyan market did about 0.2% in the positive territory, while the South African market was a whopping 2.55% reading to the north. So these are some of the big markets we'll cover for you on the show on a daily basis. But let's start with the East African markets. Take us to East Africa, where the Kenyan market was 0.26% yesterday. Stories around Safaricom submitting an expression of interest for the Ethiopia's telecom license. The authorities in Ethiopia are doing a lot of deregulation. They're privatizing the telecoms industry, and it looks like Safaricom is stepping into that market, one of the most populous countries on the continent, close to 100 million people in Ethiopia. So that looks like a big story there for Safaricom. Meantime, the NIC of Tanzania says it's acquiring majority stake in CBA. Somalia's inflation came in as low as to 4.2% in May. That's slightly down the figure in the month of April. In Zimbabwe, the Fidelity Assurance is rejigging its capital structure. We'll talk about Zimbabwe trying to set up a new dollar-denominated Victoria Falls stock exchange. We're not sure. I'm going to ask Ali later if investors are biting into this move by Zimbabwe to set up a dollar-denom Victoria Falls exchange. What's the game story there? What are the authorities in Harare trying to do? But let's talk about your market first, Ali. I was happy this morning to see that the Housing Finance Bank launched a new WhatsApp that makes banking easy for everyone in Kenya. It's going to make it easy. This is the first in Africa, and I was enthused by that. I love innovation and creativity in the financial services sector. Ali, this is your show.
So just to quickly start with housing finance, there's been a lot of innovation in the digital banking sector for all the banks, actually, in Kenya. It's a big thing. Of course, they've ridden the coattails of M-Pesa, which is the Safaricom mobile money network, which is ubiquitous and has widened its product offering, and all the banks basically jumped onto that ecosystem and now have gone much, much further in some cases, developing their own ecosystems. Housing finance has done a lot of work in that space, which segues into this Safaricom expression of interest in Ethiopia. Like you said, 110 million people, considered a virgin market. You've got one main state player. And there's been a lot of talk about this, and I think finally they've nailed their flag to the mast and saying, yes, we're going for it. The question is with whom they'll partner. They're not going to utilize their own balance sheet. So are they going to use Vodacom? Are they going to find some other combination? So we've got to keep an eye on that. But I think, again, a very attractive market for M-Pesa. Obviously, interestingly, just to touch on Ethiopia, I saw they were predicting 8.5% GDP growth for the full year. I don't know where they've come up with that number, given the current context we're in. And just to touch on a couple of the other stories, we had Kenya Power. This is our big electricity company that connects all the consumers, issued a profits warning. There's been a series of them every year for quite a number of years. Market was expecting such a warning, and I think we'll see many more from the corporate sector at the Nairobi Stock Exchange. You touched on Somalia. That was interesting. Very low inflation number. I think speaking to the slowdown we're seeing across the region. What was interesting is people were very worried about the locusts, and that would spike food prices, but we're not seeing that in this number. And then the final point you were asking about was Victoria Falls, dollar-denominated stock exchange that the government of Zimbabwe is promoting. I think it's a hard sell at this moment in time with the currency collapsing and all the other complications that we're facing in Zimbabwe. But it shows that at least they're thinking ahead about ways of marshalling capital. But right now, it's pretty tough, Boston.
Interesting. Thank you so much for giving us a bit of an overarching view of some of the big stories within the East African markets, and a bit of a touch on to Zimbabwe there. We'll talk about South Africa, the big boy within the Southern African market, in a couple of minutes. But let me get Ayodeji able to come in here into the West Africa and the Nigerian markets. Yesterday, the Nigerian main stock index down about 1%, about 0.9. Meantime, Dangote Cement, in terms of corporate news, listed its 100 billion naira series 1 bond on the Nigerian Stock Exchange. Overnight, we got news that Guinness Nigeria, second largest brewer in Nigeria, is planning a 10 billion naira commercial paper being midwifed by Stanbic IBTC and Standard Chartered Capital and Advisory Limited in Nigeria. They're bringing Guinness Nigeria to the market for a 10 billion naira commercial paper. That's one big story as well. Meantime, Ghana is making some news. Yesterday, it was a quiet day, Monday, but MTN Ghana was made a very the headlines as far as the trading day was concerned. Then, of course, we're getting the news from the SEC, from the Ghana market, that about 53 firms are being sanctioned by the market regulator, and claims by investors is getting up to about 2.1 billion US dollars. That's about 12.56 billion the cities. So these are some of the stories there. Then, of course, the face-off between Boa Cement and Dangote Cement in Nigeria over the Opala facility in Edo State, making headlines. Ayodeji, how do you come in here first? You want to go for cement, or you want to go for the Dangote Cement 100 billion naira bond listing, or the plan by Guinness to trying to brew additional 10 billion naira in commercial papers from the marketplace?
Thanks, Boston. I think I'll start with the Dangote Cement bond that was listed on the NSE. And we feel that with the lower interest rate environment, it's presenting, and we've been companies have been taking advantage of that. Interesting opportunities for them to refinance their existing loans. We're all aware that for most of the companies, banks have been the major provider of support in terms of financing, whether short-term loan or long-term loan. But banks hardly give long-term loans. So the capital market providing this platform on the back of lower interest rates. We saw MTN able to raise significant over 100 billion in this market with raising long-term. So Dangote Cement have been using, started with commercial paper, which is more short-term. But with these long-term funds now, we'll be able to use that for projects at very lower rates. So this is very positive for Dangote as well as other private private companies will take advantage of that. Also, moving to Guinness, we've seen Nigerian breweries, flour mills also take advantage of the low interest rate environment. When you see the premium, the risk premium that they had to hit is always less than 1 to 2% because of the financial strength of the company. So for them coming to raise about 10, they're able to raise about 10 billion naira at around maybe 6%. I wouldn't know the interest rate, but based on past offers, around 6%. Sure that will bring down their finance costs significantly. We are aware that that sector has been, the beauty sector has been very stiff in terms of competition, and we've seen Guinness has continued to struggle. There's been significant drop in their financial performance, very significant, and we feel that by the time they are able to also refinance their existing loan, their finance costs increased by close to 400% based on their third quarter results. So we feel that if they're able to refinance their loans, that would also bring down their finance costs, which will have impact on their bottom line. So wrapping up with the issue between Dangote and BUA Cement, that's on the mining license. Though I've based on the Dangote Cement issued a statement yesterday, as well as then also BUA Cement has also issued a statement. So though I'm not a lawyer and the case is in court, but based on for investors, that is what concerns them, especially the equity investor. I believe that the focus can be on their current performance. This mining ML, that's mining leaves, they've not been producing from it before, so it's not like they are taking that out of their current production capacity. They've not accessed it. So for existing investors, both BUA and Dangote Cement, we don't expect that to impact on their performance going forward. While we await the final judgment from the courts, I think that should be a major focus for equity investors.
Interesting. Let me ask, thank you, Ayo. Let me ask Luke Ofojebe to weigh in here on the Nigerian market. Thank you, Luke.
Okay. Thank you, Boateng. Yesterday, we saw sell-offs in the Nigerian market. Virtually all sectors closed down, save the insurance sector. The banking was really flogged. Same for industrial goods, consumer goods, and oil and gas. I mean, today, like I said yesterday, it was expected that we might be seeing like a mixed trading pattern, and that was what actually happened yesterday, just that it tilted towards the negative side more. Given what we discussed today at the Vertiva breakfast meeting, some investors are still interested in a couple of names. So we expect that to actually drive sentiment in today's trading session. So we might be seeing like upward movement in some very sound stocks. However, if we continue to see profit taking in a number of large cap stocks that are big enough to drag the market to the negative territory, then it's likely that the markets can close down again today. But the expectation is that we expect investors to pick a number of stocks in today's trading session.
Luke, so with the news around Guinness coming to the market with 10 billion naira commercial paper, Dangote Cement listing 100 billion naira bond on the Nigerian Stock Exchange, do you think this is the way now? What's the environment here stimulating these big names to start going for the debt option rather than issue new equity?
So really, it's a case-by-case thing. Every company has its own peculiar needs that it needs to address, really. But typically, when you see an economy that is already heading towards a recession, like the Nigerian economy right now, not just the Nigerian economy, it's applies to a number of economies all over the world because everybody is dealing with a pandemic. So the expectation is that you shouldn't even be raising, you should be cautious about raising debt because if you are planning to expand your business, I mean, economic activity is really going to slow down. The demand for your product is going to slow down. So why should you be raising debt in the first place to expand business that you will not really see significant demand? But then again, like I said, it's a case by case thing. For Guinness, it's actually a time to raise cheaper debt to finance its working capital, and that's a good one for them. In terms of the impact on their books, we are going to be seeing very low finance costs going forward if that CP is fully subscribed, which is a plus for them because I mean this year for a number of the brewery companies, the expectation is that we should be seeing declining turnover because of these social distancing measures. Bars and clubs are still closed for now, so that's a significant portion of their demand already out of the market. So the expectation is that turnover should fall. As turnover is expected to fall, finance costs are also dropping for them. We help to cushion their earnings because lower finance costs means that less pressure on bottom line going forward. So I think that's actually a good one for Guinness, really.
Okay, thank you, Luke. We will try to chat to the story around Ghana. Ali and Ayodeji a bit earlier before the show started. 53 fund managers being sanctioned or being in some form of a very difficult situation in Ghana with claims by investors about 2.1 billion US dollars, about 16.5 billion cedis. So yesterday, the SEC also revised some of the previous sanctions about 3 firms whose licenses were revoked. So, Ayodeji, do you have any idea what's going on in Accra?
I think based on the available information for the Ghanaian market, for a lot of the fund managers had come up with a structure which I'll call like a private funds that are not regulated. For some of them, I've carved out an SPV to create such fund, and they've raised money, and they've raised money from the public, and now some of those investments have gone bad, and I think what triggered the Securities and Exchange, the Ghana Securities and Exchange Commission, was 1 or 2 companies that have defaulted, that their investors were not able to get back their funds. So as a result of that, they are doing an overhauling, trying to review most of the operations of most of the business managers, and they found out that a lot of them have they have a lot of structures that they've used to raise finance, which is not in line with regulations. So for it beyond it's really is really going to have very negative impact on that market, and even for most of the some of the companies that is being shut down, unemployment too is also expected to spike. And for the investors that have also lost their money, it may take years before some of them will begin to gain confidence to reinvest. We all knew what happened in 2008 in Nigeria, where you had a lot of private placements. A lot of investors lost their funds, and till now, this is almost 2008. This is almost 12 years after. A lot of investors have still not recovered from that loss or from that shock. And that is one of the main reasons still affecting retail investor in participating in this market. Yes, it's good that they are clamping down on them now very early. There will need to be a lot of investor education to reinstate confidence in the investors before they can begin to invest and bring their funds into that market again.
Interesting. Thank you, Ayodeji. Ali, what's your take on this for about 30 seconds before we touch on Southern and South African markets?
Well, my take was, first of all, the sheer number of sanctioned firms, 53. That's a huge number, which speaks to a very diversified fund management business that's going on in Ghana. And the second thing is $2.1 billion. It's not a small amount of change. That is, a large chunk of change. And I was quite surprised at the amount, but it speaks well to the regulatory authorities seeking to get on top of the situation. But I think it'll be interesting to follow this story and to see exactly what SPVs and instruments people were investing in that went sour.
Interesting. So let's talk about the South African market. The GSE had a very positive Monday to start the week. The rand weakened a little bit further. Meantime, Discovery Group listed on the GSE says profit warning. Ali, like you had with him with the Kenyan Power, it looks like profit warning is no longer any warnings. It's declining left, right, and center. I haven't seen any from the Nigerian markets anyway in Frontier Africa, so I don't know why. But Discovery Group talk about profit warning. Still talk about Telkom. Telkom in South Africa expecting headline earnings per share to dip around 65 to 70%. Meantime, Namibia, RMB, which is South Africa's big bank, one of Africa's big banks, says overall growth will slow to about 6.6%. Botswana inflation, quite a lot to talk about here in South Africa. Which one are you biting into, Ali?
So just firstly, the Johannesburg Stock Exchange tends to get whipsawed by what happened in New York. And yesterday, we had this tremendous sell-off in the morning session. Then the announcement by the Fed that they were going to start buying investment-grade bonds. They're going to create this fund, 10% equity, 90% leverage, investment-grade level. And that turned around the Dow Jones. So you got this big swing effect in Johannesburg as well. So there the headline is showing minus 2.55. There's been a significant turnaround since then. The other stories that were catching my attention, obviously it's going to be a string of profit warnings. I can't think of any business other than data, mobile, maybe internet-based businesses, which are going to do extremely well in this year, this year of quarantine and lockdown and COVID. And then 6.6% seemed a bold call for Namibia. Low inflation in Botswana, 2.4%. I think that's all about the demand side of the equation going down. And I think that phenomena we're seeing across the continent. And this finally, just to make 2 points, we've seen a lot of geopolitical drama this morning. We've seen this attack by North Korea on the liaison office and the demilitarized border. They blew that up. The interesting story is then is the emergence of the sister, the disappearance of the brother, who is the supreme leader, and she seems to be taking a much bigger stance. And then we've had a fracas between the Chinese and the Indians up in the north of India. 3 Indian soldiers dead. So just to warn people that geopolitical stress. And then finally here in Africa, we've had some very strong language between Ethiopia and Egypt. I saw the deputy military man in Ethiopia say, we're ready for you guys. I've never seen language like this. So that's all about the Nile.
I agree with you. I agree with you. The Ethiopians and Egypt has to sort out these very game-changing power facility being built for the benefit of the Horn of Africa and East Africa. Would be a game changer if they could get that dam done and get electricity and what have you done there. It has to be resolved. When I saw that story from the Army General in Ethiopia saying we know how to fight war, our history, then I just thought back thousands and thousands of years ago when the Ethiopians had 1 million soldiers as recorded in the scriptures, but that's a story for another day. So we just hope that there will be no ratcheting of saber rattling. There would African Union will be able to come in there with the EFDB, which is part of that project, and others can weigh in and try to calm nerves and get things going. Thank you, Ali. for coming through on that this morning. Thank you, everyone, for this. So let's just wrap up in about 30 seconds. Ayodeji, give me your take for today's trading day on the Nigerian markets.
I believe that there will still be some profit taking. We're seeing some sell-off from some of the FPIs, though a lot of them are stranded. But we feel that the local investors are still waiting on the sideline. They are just being cautious with their entry price. So we believe that some counters that lost yesterday, we may see renewed interest in them, while some of them will shed some weight. But what we are positive that the more weight even we see shed, the more weight in the market that is shed, we feel that there will also be renewed interest as long as interest on fixed income remain very low.
Great, thank you, Ayodeji. Luke, what's your final take? 30 seconds on today's trading day.
So my view for today's trading session is similar to that of Ayodeji's view. The expectation is that we might see a bit of mixed trading today. Like you said, of course, we see the possibility of profit-taking activity is still there. We might see investors still taking profit in a number of stocks. At the same time, we have investors who are still interested in a couple of names. However, they might want to be cautious about the prices at which they pick up these stocks. So overall, I see a bit of mixed trading, but slightly tilted towards the negative.
Okay, a quick one from Ali around the North African market. Ali, just a quick second. The Egyptians, like everyone, a lot of CPs, commercial papers are coming through. Everybody's talking about raising money. The Ivorian folks are doing it. We're doing it. Egypt, central bank issued 6.5 billion Egyptian pounds treasury bonds in 2 installments. And the trade report shows EXIM, that's export-import, about 3.2 billion Egyptian pounds in Q1. What's your take on North African market for about a minute, quickly, as to round us off for today? Ali.
I think Egypt, very liquid market. I think it's returning to more normalcy. It was the darling of carry traders for the last 2 years because you are actually getting an even higher return than you would get in the Nigerian OMO market. So I think people are getting comfortable, the currencies remain fairly stable, and you'll start to see liquidity flow back into the Egyptian market. That's why I expect to see more of this type of bond issuance by the Egyptian corporate sector. I think the phenomenon you're seeing in Nigeria is going to be very similar to what we see in Egypt.
Okay, thank you so much, Ali, from Nairobi. Thank you so much, Ali Kansaku, Sachi Rich from TS Management Limited. Thank you very much for being on the show today. See you tomorrow. Luke Ofojebe from Vertiva Capital, team lead, equity research, and Ayode Jebo, chartered broker, and the CEO at Afinvest Securities. Thank you, gentlemen. Have a great Tuesday, and let's converge again 9:30 a.m. tomorrow morning for the show once again on Frontier Africa Reports. Bye for now, everyone, and thank you for coming.